The calendar has flipped to a new year. Your business is humming along. Plans are being made. Goals are being set. But hold on a minute. There is a critical task looming on the horizon that you cannot afford to ignore. We need to talk about your T4A obligations. This little piece of paper, or more likely, this digital file. It's more than just another form. It's a legal requirement for reporting specific payments your business made to individuals, other businesses, throughout the last calendar year. Ignoring this responsibility isn't an option. It can lead to hefty penalties from the Canada Revenue Agency, the CRA. It is not about you. It's about making sure everyone pays their fair share. They need that T4A slip to accurately file their personal income tax returns, or their corporate income tax returns. Without it, they're left guessing, which can cause problems with tax authorities. By doing your part, you avoid penalties and make tax time smoother for everyone. Filing on time is not a suggestion. It's a rule with a firm deadline. The cutoff is the last day of February each year. For the 2025 tax year, that means submit by February 28, 2026. Missing this deadline can trigger late filing penalties that start small, but they can grow quickly depending on how many slips you have and how late you are. The stress and financial cost are avoidable. A little planning and organization now will save you a world of hurt later. Think of it as an investment in your peace of mind. Now let's get down to brass tacks. Who exactly is required to go through this process? Business owner, employer, trustee, executor of an estate, pension administrator. If you made certain payments to a resident of Canada in any of these roles, the responsibility falls on you. Small businesses, the most common scenario is paying for services. Contractor, freelancer, consultant. If you paid one person more than $500 in a calendar year for services to your business, you must issue them a T4A slip. Remember the $500 threshold for fees for services. But note, it's not the only trigger. Pension or superannuation, lump sum payments, self-employed commissions, annuities, retirement allowances. There is no minimum dollar amount for these categories. Even a small payment of this nature needs to be reported. These rules cover a broad spectrum of transactions. Prize, if over $500 requires a T4A. Award, if over $500 requires a T4A. Research grant, scholarship, death benefit, payments from a registered disability savings plan, an RDSP. Those also require a T4A. That's why meticulous record keeping throughout the year is essential. Keep a clear trail. Who you paid, how much, and what for. You do not need to issue a T4A for payments for goods, not services. Office supplies from a store, raw materials from a supplier. If your contractor is a corporation, you generally don't need to issue a T4A. But confirm this with a professional. The rules track income flowing to individuals and self-employed proprietors who must remit their own taxes. Let's dig deeper into the types of payments that commonly appear on a T4A slip so you can be sure you are not missing anything. The most frequent one for small businesses is fees for services. This is reported in Box 048. This box is for the money you pay to your independent contractors. This box is for the money you pay to freelancers. This box is for the money you pay to consultants. Another common one is commissions from self-employment, reported in Box 020, payments to self-employed salespeople who are not on your payroll. It is crucial to use the correct box for the correct type of income. This helps the CRA and the recipient properly categorize the funds. Beyond service fees, you might encounter other payment types. Pension payments go into Box 016. Superannuation payments go into Box 016. If you provided a retiring allowance, report that amount in Box 026. Scholarships are reported in Box 105. Fellowships are reported in Box 105. Bursaries are reported in Box 105. Some income types are taxed differently than others. Using the right box ensures the recipient's tax return is calculated correctly from the start. Taking the time to match the payment to the proper box is non-negotiable. You have identified who you need to file for and what you paid them. What's next? The filing process itself. First, gather all the necessary information for each recipient.